Okay, here we are. We are live on YouTube. And Josh, where are you visiting
Well,
us from today?
well, I'm in the Manila back office, so we can't always spend all the time in Dubai. So I'm like in my office in Manila, which looks more like a closet, but it's not that glamorous sometimes. The view looks okay, but and there's no typhoon right now. So there's been a typhoon since I got here, so I haven't got swept away. The drainage works pretty well where I am, but I've seen some pretty wild videos. So
Well, that's good.
well, I guess the water coming down the drain. We're going to talk about the Canadian interest rates falling today, right?
Yeah, more than one thing is falling, right? Besides rain, the interest
Wow.
rates have been falling here, and being from Entrepreneur Mortgage Solutions, I mean, this does affect us in some way. So I think having a good discussion about that will be helpful for anybody who's looking for a mortgage or trying to dip their toe into the housing market in Canada, and just what this mortgage rate drop is actually going to do for our economy, for home sales, and so forth. So why don't you go ahead and get us started with that? Did you want me to share the Instagram channel?
Yeah, let's share the stream
All
and
right.
let's see what we, kind of recap what we have this week that
Well,
kind of
let
kind
me.
of culminated in the uh culminated in the reduction of rates, right? So,
You got it. There we go.
okay. So let's scroll on back there a few days. Oh man. Okay, so let's go with the rental prices. So just, we finished off last time with the oil, with the oil inventories, but let's
Okay,
jump right into the rental prices because man, these are uh tale of a couple tales, and depending on what city you're in, it could be wildly different here. So
for sure. Oh, whoops. That should be this guy here. Yeah.
that's right. Yeah.
All
Fire
right.
in
There we go.
and we'll see. Vancouver down a little bit from off the highs. We're looking at, but it's still wildly expensive in Vancouver, right? $2,700 a month for a one bedroom, $3,600 a month for a two bedroom. So they're, you know, 7.5% declines, but they had such a run up that it's not so much of a shock that we've seen a pullback there, right? And of course, Burnaby, is a stone's throw away. Also in the red, and same with Toronto. We just hear so much about Toronto. It's interesting. Like a lot of the noise I hear online, a lot of the info I hear online, it's just very Toronto specific sometimes, which is like the most populated city in Canada, but it's a big country. It's a really big country, right? Um, but you could see Victoria. Victoria would still, 5% increases on one bedroom, 7% increases on two bedrooms. It's a smaller market, and then caution people on these, some of these stats that we put out. The smaller the market, the more likely you are to have some sort of, anomaly in the reporting, right? But Victoria is not, you know, tiny. There's smaller markets in Victoria, and it's just desirable. People want to be there. They want to be on the island. They want that relaxed lifestyle. I'd rather be in Vancouver myself, but that's just kind of the way I'm wired. Maybe
Yeah, because if you're on an island, you're on an island, and
I'm on the island,
getting
right?
off that thing is a little bit tough.
That's right. I think Edmonton is as small as I want it to be. If I'm not in Edmonton, I'm going somewhere with, I'm going to Dubai or Vancouver. Not so much, not so much of Victoria, right? So, but moving through, you start to see Halifax. Wow, like Halifax has just been like
Wow.
a big standout. It's for people who haven't traveled there. It's pretty nice. Like it's a nice place to visit. You got the harbor that's kind of downtown. There's a lot of cities in Canada, or maybe you don't get that sort of that sort of view, that sort of scenery, and like for people who haven't been there, they probably can't grasp that it is a pretty scenic place. So you get the influx of uh, you know Eastern Americans who want to spend some time there, and that makes a big difference in it too, right? But oddly enough, for everything we see in Ontario, Kingston still very strong. 10% increases year over year in rent, and 14% on a two bedroom. And yeah, keep scrolling past there, Trevor. we're getting some of the, some of the other cities. Calgary still 3%,
Mhm.
2%. Mass population growth inside of Alberta right now. Like I was at before I left to the Philippines, I went and picked up some stuff from West Edmonton Mall, and like it just felt busier, for and maybe people have been around a little bit longer, might be dating myself. It's like, remember that feeling back in 2007 when the oil market was just cooking and it just seemed like everything was busier and it took longer to drive places. It's like, yeah, just like getting that feeling. And now it's not due to $110 a barrel oil this time, but it just feels busier. I don't know. Are you getting that? Are you getting that impression, Trevor?
Yeah, yeah. Last few times I've been to West Edmonton Mall, I've been in, midweek. I've been, on weekends and after our boot camp. And yeah, it just seems like it's always tight. It's always bustling. There's always people there. Even if they're just mall walking or window shopping, but people are still there. They're buying stuff. There's commerce happening there. And I'm not sure where, people are getting this money from, because, things are much more expensive. And now we'll probably talk about the dollar a little bit today, so our dollar isn't going as far. But yeah, it does feel a lot busier. And I haven't noticed too much like in the nicer restaurants and stuff when we go out for dinner for special occasions and whatnot. It's usually pretty bustling in those as well.
Yeah. We'll move on. We'll move on to the last one there.
Sure.
Um, some of the smaller centers, Edmonton, 14% and 13%. And it's
Oh,
like I say, like some of the smaller centers, you get strange numbers sometimes, but Edmonton's got 1.3 million people. That's not a strange number. It's just more expensive by a lot, right? And it's not too, if you look at the history of real estate prices and rental prices in Edmonton and Calgary, it's Edmonton tends to lag, right? If there's pricing increases in Calgary, it's like Edmonton, to a lesser extent, eventually, catches up. Uh, Maybe like Winnipeg, a little bit surprising. Quebec
yeah.
City, 17%. It's like you're seeing, I think what you're seeing is like, remember, you go back to the first page on this list with some of the bigger, more expensive areas. As people are leaving those bigger, expensive areas and they're migrating to the places that are a little bit more affordable. And now that housing is kind of going up. They kind of realize that if you're gonna work at a regular, minimum, if you're going to work at a minimum wage job or a median income job or something like that, it's like, it's relatively the same wage rate in some of these smaller centers. Why are you paying, $3,000 a month for an apartment when you can get, that same income level somewhere else for, $1,500 a month, right? And so you're seeing that. You're seeing the people migrating to these smaller centers. And so looking at some of the comments there, it's like, it would be helpful to get the Atlantic province cities here. Halifax is on there.
It's on the
Yeah, it's
list.
on there. It's on
Come
the
on.
list. We didn't forget you. We didn't. It's and some of the smaller numbers, like these are monthly figures. There's some good annual data sources, but smaller population centers, it's like, I don't know how accurately we can tell people how many people are moving to some of the smaller population centers in Canada. It's like it's less reliable. The smaller the population center, the shorter the period. It's less reliable. But you'll get a good indication from that. It's like these points are like, this is a starting point. People want to know. It's like, you look at something like this, just jump on Facebook Marketplace near you. You'll start to see some of the rental opportunities out there. It's like, it's good to get multiple sources if you're truly making an investment decision or anything like that. So that's what we're seeing. We're seeing the pricing pressure upwards on rental prices. So
Yeah, and like you say, when you're getting into, purchasing a home and thinking about having that extra suite in your home or buying it strictly as a rental unit, I mean, the rent goes up, the mortgage, it gets paid off over time. So I mean, right now it's not a bad time to get into the market.
yeah, yeah. And so move on to the next one. The next one deals with the pricing, itself, just on an aggregate basis in Canada. And it's like here it is. It's like, BC's kind of flat, right? And for all of the noise you hear in Ontario, and there's extreme cases in the greater Toronto area. But like Ontario as a whole, the prices are only down 2%. They're only down 2%. You get Northwest Territories. That's one of those, like, even as a territory, it's still a smaller population center. So I would take every data point, a monthly data point from a small population center like that with a grain of salt, and just look at the trajectory. But Alberta, like Alberta's, not small. We're talking 4 million people. If it's up 9.2%, it's up. Like there's like it's up. Things are at a premium. Renting properties at a premium. The prices are up, and they're up rather significantly. So you start looking at some of those data points and going, New Brunswick, and New Brunswick's another one. Like, it's like the Northwest Territories. It's like, it's bigger, but it's one data point, smaller population center. But when you see numbers in BC, Alberta, Ontario, Quebec at 6.3%, like, these are big population centers. It's like when you see the needle move even on a monthly basis, it's telling you something. So
Yeah, for sure.
importantly,
And,
work
and guess
there.
who's going to be buying a house here in Alberta in the next couple of months? This guy.
Yeah, why we get one with the suite. It's what we always say, right? Because you start looking at those rental prices, it's like it's one of the best things that you can do. We moved to some of the population centers in uh in BC, the interior of BC, down by 5.3%. BC North, though, up by 4.5%. So even within the provinces, you'll get a lot of variation. So when people, someone in the GTA is telling you that housing prices are under pressure and we're headed for a bubble, it's like, oh, come on, man. Like, it's more nuanced than that. It's a big country, right? It really is a big country, and even within the GTA itself, it's like, there can be some extreme cases, but like, look at the aggregate data. What is the aggregate data telling you, right? Because the market's kind of designed to keep you scared, right? I think it's
Mm.
like that is the machine, right? The machine is basically, telling the average simpleton, it's like, you should be scared, and the only way to avoid risk is to, trust the machine, right? And it's generally, it's like, this game is, I tell people, this game is Monopoly. The goal isn't to make a perfect purchase. The goal is to get more doors over time, right? And so, should you extend yourself so far that you're so restricted that you're never going to get another door? It's like, no, I don't think that's the way that you should operate. But should you stay out of the market looking for the magical point to purchase in? It's like, time in the market generally beats timing the market every time. So
Yeah, I did
that's
have a
BC.
question. I had a
Yeah.
question about the numbers here. Is this everything lumped together? Is this single family home,
Mm,
condominiums,
yeah.
apartments? Like, is it everything or is it just single families?
It's good question. It's all housing units. It's all
Okay.
housing units. Yeah. Like if we were looking at single family, these prices would be much higher, especially in BC, right? So it's all housing units, right? You get into, Alberta, it's just everything's in the green. It's like you can just see the migratory patterns, plus 5% on a population level. We posted some stats, a couple months back. It's like 5%. These are like, you know, 5% on a population growth. That's like, what we report on, some of the African countries where people talk about population explosions. Like, 5% compound annual growth rate is, it's massive in terms of a population center. People commenting they're so good compared to $999,000 average price in BC. Is, yeah, like being a tenant for the rest of your life in BC versus, being a homeowner, and in Alberta. It's like, that's the decision people have to, make sometimes. It's like, people in the US have gotten over this already. It's not like everyone grows up expecting that, I deserve a place in Manhattan. It's like, of course you can't afford a place in, Cole Harbor, Vancouver. It's like, there's no government or, single policy change that's going to, affect that, right? And so, really, we have to look at that. So that's
That's right.
Alberta,
Awesome.
massively, massively in the green. And then this is the data we have going into the rate decision, which we post next. It's
Yeah.
and another cut. And so we're looking at another cut. And I just look at it and it's just, I it's my it's my feeling that it was kind of unnecessary. If you look at me like what's the biggest risk is I think the biggest risk is sticky, persistent, difficult inflation. In terms of like cutting rates, it's like it's very easy to throw gasoline on a fire, even if it's a dumpster fire, like in COVID. It's like we drove the prices of everything up with, free money. It's very easy to, to get the wheels turning by dropping rates and engaging in quantitative easing. So to me, it's like, is that a risk of overshooting and staying too high for too long? It's like, yeah, it is a risk, but to me, it's a smaller risk because the medicine is very proven. It works. And so I look at this, and now our next announcement is September 4th. So we cut two meetings in a row, and that September 4th meeting is before the September meeting in the US. So conceivably, we could have three rate cuts in Canada before one in the US, which, if I was gambling a month back, it's like I don't think I would have put my money there, right? And it's but maybe at the end of the day, it's like sometimes you tend to favor the things of what they should do, not what they're going to do, right?
Yeah.
Um,
Yeah, exactly. I mean, like when they cut last month, I was not expecting it. I thought they would just hold it. And this one here, I thought for sure they're just going to hold it at 4.75. But no, they went ahead and cut it another quarter point. They're trying to they're trying to make it look like things are better than they are and try and cool down the interest rates. But it's short-term gain, long-term loss, in my opinion. I'm kind of with Teeter 76 here. Whoop de shit.
Still broke AF 100%. Like
Yeah.
there's no denying that. Like all the governments that are in every Western nation is kind of in the same, same racket. They're still all broke, and it doesn't matter who we elect.
Yeah.
Sean, 10D at the boot camp. We've seen him at the boot camp a number of times, and two in a row indeed. Surely this is the unpopular our current government is rotten from the inside out. So, I mean, you see that, and hard to argue with that, Sean. Like, yeah, like it was, should they have held the line in June? I think they should have held the line in June. Did I think they were going to cut? Probably thought they were going to cut. Did I think they were going to cut twice? Not really. Like, because now it sets it up. It's like, well, if you cut twice, why are you not keeping, why are you not going to keep going, right? You're not waiting around to get any data. You don't get a lot of data after one cut in the next month. It's like these things lag. So, it almost seems like they're on the trajectory, and you also got to think that they speak too. Like you got to think that Tiff McLemore, Bank of Canada, speaking to Jerome Powell, and I don't think they would go out on a limb and cut three times if Jerome hadn't have said it's like, yeah, we're done in September, we're cutting in September, right? And I think the odds of a rate cut in the U.S. in September are now over 80%. So now keep in mind they've been high before and people have been wrong, but election rate around the corner. I think it's pretty it's the odds are favoring that they're going to cut in September, but Canada could go three times before that one rate cut.
Yeah, and
Now
who
I heard
knows? Like the United States might do a full point or three-quarters of a point at that time in order to kind of match what we're doing. So I mean, if they are talking, that may be what they've given a heads up to our current Bank of Canada.
Yeah. And I heard one thing, and it's I heard the latest fear porn of the week
Oh,
was
great.
people going out and talking about the Canadian repo market injecting the Bank of Canada injecting $16 billion in the Canadian repo market. And the question is like one of the Canadian banks is already insolvent. It's like, okay. I mean, dude, all the banks are insolvent. Like they've always been insolvent. Like they only work because the Ponzi continues to work. And it's like, and they're 16 billion. It's like they're 16 billion dollars. It's like they would inject 160 billion without blinking an eyelash. Like at 16 billion, it's like it's a drop in the bucket. Like they wouldn't. there's no question they wouldn't bail out a bank through the reverse repo market to an order of magnitude higher than that. I don't even think if, people were on vacation that they would call them back in at 160 billion. 1.6 trillion? Well, maybe they're having some discussions, but injecting 16 billion into the Canadian, it sounds like a lot. To the average person, it's like 16 billion, but it's like it's really not that much money in the scheme of things. We have our five established banks. It's like, I think if push comes to shove, they wouldn't just inject 160 billion. They would go ahead with the 1.6 trillion before they would, see one of them fail. So, I
Well,
just don't.
can you describe a little bit about that? So that you're talking about the reverse repo market in Canada, right? How does that actually work, and what is that dependent upon? I know it's so that it helps the banks become solvent, I guess, with their liquidity. Maybe you can describe that a little bit for the audience who doesn't really follow these things as closely as you do.
Yeah, think about it. It's the savings account or the credit card for the bank, right? They can, put their excess capital into this facility and they can earn the overnight rate, which is, pretty darn close to these Bank of Canada rates that you get. Virtually risk-free because your counterparty, the bank's counterparty is the Bank of Canada and they got the money printer. So, would they rather lend it to John Smith at 4.5%, or they rather lend it to the Bank of Canada? The Bank of Canada has zero default risk. Okay. But it works the other way too. They can borrow against that facility. So the Bank of Canada has to inject capital. It says that, the banks are struggling with their liquidity. Is it kind of, not to the extent of, Silicon Valley Bank where they have, securities and they have treasury bills that have a long duration. And if they were, potentially have problems if they sold those, treasury bills at this point. But like my point is like the Canadian banking system, it's different. Like there's five of them. They would inject way more than $16 billion. Like I don't even think like I almost think there's probably an intern who has the authority to inject $16 billion. Like I'm being a little, I'm being a little bit exaggerating the point, right? But at the same time, it's like $16 billion is nothing. I don't think they would blink an eyelash to do an order of magnitude more, 160 billion. There would be no talk of letting a Canadian bank have a liquidity crisis. In my view, it's like I don't think there would be any talk in anything south of $1 trillion, and I just don't see where we're not getting there anytime soon. So when people look at this now, that might affect the speed of the rate cut. They might not have wanted to inject it, and maybe that is what's going on in the background. It's like okay, that's maybe why they did it, but people connecting an injection of capital into the reverse repo market to one of the Canadian banks are in trouble. It's like, man, those things aren't in trouble. Like the government will bail them out. It's like, and do I believe that? It's like, yeah, I have stocks in all of them. Is there any chance I'm going to sell it? It's like, no, I'm going to collect that dividend over time. And then we move to the prime rate. People have to understand that the prime rates are more close to what the actual consumer is going to get. It's like, yeah, I know, you can get a mortgage on, from an A lender less than that, but like not everybody in Canada is getting a mortgage from an A lender. That's that, Trevor, in your
Yeah.
role, it's like, everyone thinks that everyone else is a T4 employee with excellent credit. It's like that's just not that is not the overall survey of the land, right?
No,
So
absolutely not. That is not the usual. And especially with us because we're dealing with a lot of business for self clients, so business owners. They have different qualifying criteria. So a lot of times, they can still get a decent rate, but it's not going to be like someone who's a T4 employee with good credit. Be a couple of points higher depending on, what their financial situation is. But we can still help them out at the end of the day. It just makes qualifying that much more challenging. Plus, you have to find different lenders, and if you can't find someone on the A side, you can go on the B side, and then private. It really all depends on what the customer situation is.
yeah. And so, we look at this because, you get a lot of variable rate mortgage products. Anybody on a variable rate is like, let's call it prime less a half, maybe slightly better, slightly worse. And anybody on a HELOC is usually, prime plus a half. Again, maybe slightly better, slightly worse, but that's so that affects right away, right? And you start to see these rates, and again, I tell everybody, it's like, I do it, do I think they should have cut this quickly? I just don't think so. I don't think they should. And I truly mean that because, in the short term, I benefit. If you want to cut the rates, I benefit. I, own a bunch of real estate and, a bunch of variable rate debt. And so it doesn't scare me. Before the people in the comments, kind of erupt. It's like, I own real estate that's not all residential real estate, people. It's a little different lending environment when you do it. So, um, yeah, and so, studying this history, are we going back to 2.7%? That's exaggerated. Like, historically, this is going back to somewhere in the fours. The four is kind of par for the course, anywhere between 4 and 5%. So that means a Bank of Canada rate between 2 and 2.5%. So you start looking at those cuts, extrapolating it out. If they do a quarter point, if they do a quarter point every meeting, and the Bank of Canada meets 8 times a year, that's 2 points. We come down 2 points in a year. That's conceivable. Do I think they would just keep rocking and rolling a quarter point at a time? It's possible. I mean, I don't think they should, but I mean, they might. But ultimately, you got to think things are going to kind of mean revert back down. And then, we kind of finish with the last slide there, Trevor. It's the posted rates. Oh, they're
There we
brutal.
go. There we go, folks. Posted
Paul,
rates.
we were not going to let you down. We're coming on the podcast. I just got a little bit confused on our schedule here, operating from the Manila office. But I look at these posted races, like, yeah, like, I mean, are you trying to, like, is the goal to execute on one of these posted rates? No, but sometimes people get forced into these posted rates. Sometimes their renewal offer says one of these posted rates, and they can't requalify for the property that they own, and they just got to sign on the dotted line and grin and bear it, right? And then there's some people who are, they're not A lenders. It's like, yeah, that's kind of the types of rates they're looking at these days. So, it's important to see that, and you don't assume just because you can get a rate that everyone else can get that rate. So when you're trying to make aggregate investment decisions, it's like, look at those poster rates. And for some respects, the banks like to uh, under promise, and maybe that's a good thing, right? Because you see the clients, and they got over promised by a mortgage broker, and it's like, I know there is this ideal rate, but is this buyer, is this borrower going to get that ideal rate, right? And so when you're thinking about property purchases, you kind of got to understand, is like, sometimes, like, you might not qualify for that ideal rate, right? And so, it's a good kind of just a test. It's like, if you got forced into one of these rates, like, how would that affect you? Would you be unhappy but no problem, or would it be, a catastrophe, right?
Yeah. Well,
Um,
even if someone's doing a renewal right now, let's say they had a mortgage at 4% and they're going to, let's say, 6.24 from BMO or 6.24 from RBC. That's not the end of the world because they're not having to requalify for that. Because requalification, you have to add 2 points onto that, right? So they'd have to qualify at
yeah.
8.24%. So if they're doing a renewal at 6.24, just do it for, I mean, that's a 5-year variable rate, but that's okay if it's a 5-year variable because you've got some more rate cuts that are probably going to be happening. And what is the average over time over the 25-year average mortgage rate on a adjustable rate mortgage? We had that data somewhere.
Oh, it's back. You probably have to scroll quite a while on the Instagram channel, but like generally speaking, it's like 3/4 of a point to a point. Like, if people just shut their brain off and just went variable for the rest of their life, like, they'd almost win all the time. And everyone says that they can predict rates, but the lack of their private island and private jet sort of speak otherwise. Because if you could predict rates, like, there's a lot of things you could do with that if you were really sure on that. And the other part is, like, sometimes rates are less certain or more certain. Sometimes it's more clear where they're going, and sometimes it's less clear where they're going. But people always assume that their house comes up for renewal at that magical point where it's the most obvious where rates are going. It's like, that's not how it works, right? And so if you fix in now, it's like, okay, if you think rates are going in a different direction, that means you have to break the mortgage and pay a penalty. So even if you know where they're going, you have to understand it's like if you're in a fixed rate product, it's like now in order to execute on that premonition, you're gonna have to pay a penalty to do it. So it's not a true savings. And so for the people out there who will just shut their brain off and go variable, it's like they had a pretty wild run there between let's call it 2015 and even 2020. Everyone was always saying the variable rates are going up and variable rates are going up and lock in and lock in and lock in. And they went years, right? And then
Yeah.
eventually they did go up. And so people just have to understand like what's their risk tolerance. Like if you can't afford to pay a 7 or 8% rate, you can't afford to pay the variable rate game, right? Because even as we say, rates are going down now, it's like probably every decision you make, it's like there's very few sure things in life. So it's like, there's a high probability things and then there's low probability things, right? But there's very few certainties like this is not going to happen or this is going to happen, right? Yeah, but that's, kind of how we look at it. And then looking out to the weekend, Trevor, what do you think Trump's going to say about Bitcoin on the weekend?
Oh man, I think he's going to be all in on Bitcoin. He's going to be talking about, having it on the balance sheet for sure. And because I saw a post just today on Twitter that RFK was talking about having that he said for the Treasury to buy, I think it was 550 Bitcoin a day until they have 4 million Bitcoin in Treasury. So that's RFK, and I'm sure Trump is probably on the same boat with that. What about you?
Well, I mean, like I was surprised RFK went that far with that projection, five, that's what he would do, 550, but very specific. Good on him. Like he actually had a policy, like him or not. It's like I just have more respect for people who actually have policy rather than just like rhetoric, because you haven't heard a lot of policy from a lot of leaders these days, but very specific. I'm going to buy 550 Bitcoin a day till, we have, 4 or 5 million, right? Okay, I got it. Like that's a real thing. Like it or hate it, but at least he's got a plan, right? And the other thing he said, I have most of my net worth in Bitcoin. That surprised me, right?
That's something else, right?
That surprised me because I remember saying a while back, I bought one or two for each of my kids, right? But
Mm.
most of my net worth, wow, that's big. I don't know. I believe him. I guess maybe he's a Kennedy, so if he goes to zero, he probably gets propped up anyways, right? So maybe it's not as big of a risk for him as it might be for the average person. Do I think Trump's going to go full out? Like, there's a possibility. Would I like him to? Yeah, I don't know. Will he go? He's going to say pro crypto. I mean, at minimum, he's going to say that he's going to be less antagonistic to the crypto space. He's not going to sick the Security and Exchange Commission off of every legitimate crypto business. But will he go full scorched earth with a Bitcoin reserve strategy? It's like, wow. Uh, we'll see. Again,
I don't
it's
know.
not a
Because back in the day, when he was president, he wanted to get off the Fed and get off the fake fiat currency and go back
yeah,
to the gold standard. So what's
yeah.
better than the gold standard? It's the Bitcoin standard, right?
It's Bitcoin. I mean, would I do it? I was like, I think what RFK did, what he said, I think that would be a good goal. I don't know if I would have set a limit though if I was RFK, because I think if you're U.S. government and you buy 550 Bitcoin a day, and your terminal goal is to buy 4 or 5 million, you know, I think the U.S. government already owns a million. They've never bought it; they just got it through confiscating it from people. But if your terminal goal is like, I don't think people realize how expensive the Bitcoin would be if they actually followed through on that. If just the confidence in the market, if they knew the U.S. government was going to do it, that's one thing. But so, will Trump do it? I mean, he'll be pro crypto. Will he go full scorched earth? I doubt it. Is he actually gonna, say he's gonna buy Bitcoin, or is he gonna go all the way and say how much Bitcoin and how long, over what time period? That's a rather lofty commitment. And then, of course, there's you got to make sure you don't get you actually still win the election and you don't get shot over the next 3 or 4 months too. So that's part of it. And then, like any politician, you got to wonder. It's like you can say one thing, then do you actually do that thing, right? Or is there always a reason to delay it into the future too? But it'll be interesting. I guess we'll figure out next week if that's what's going to happen.
All right. I guess until next time. Next week, are you back next week?
I will be back in the office Friday next week. We're going to try to go for 8:30 a.m. Mountain Time. That's our new objective. 8:30
Okay.
a.m. Mountain Time. We had our evening appointment here this time, but I gotta for now it's my bedtime in Manila as I operate as a vampire and the sun's getting me. So
All
yeah.
right. Well, we'll let you crawl into your coffin while we we go finish off our day and start again tomorrow. But yeah, thank you so much for coming through and taking the time to speak with us today. We got our number 8 podcast out, even though it's a little bit out of time. And for anybody who is looking for accounting services or looking for a mortgage, you can contact spurrell.ca or go to entrepreneurmortgagesolutions.com, and we'll be happy to help you. All
Right on. See
right.
you guys next week. Bye bye.
See ya.